CBA and Macquarie Bank came out in last quarter of 2025 and they changed the trust lending policy. Now it is impacting a lot of sophisticated property investors, and in this video I'm going to cover how it is impacting, what has changed, and what smart property investors are doing right now. So this video is going to be very useful. First of all, let's talk about CBA policy. What they did is they come out and say new trust lending cannot be done by broker if they don't have an existing lending facility with CBA. What this means is, if as a guarantor or applicant you do not have any personal loan, car loan, home loan, credit card, any sort of credit with CBA for at least 6 months, you cannot get trust loan, right? So now this can stop so many property investors applying in CBA through broker, and they may not get a home loan under family trust structure for at least 6 months after they open the credit facility. So this can reduce the inflows of application in CBA, definitely. This can also discourage so many property investors going through CBA or buying under a family trust structure. And now Macquarie Bank as well, what they did in last quarter is they completely stopped all the lending in trust structure. We don't know why they did it, but they completely stopped it, right? All of a sudden. So now this will send a negative message in the market saying, oh, banks are stopping family trust lending. That means they don't want people to buy multiple property through trust structure. Why people were using it in the first place? Sophisticated investors, those who want to build multiple property portfolio, keep increasing the borrowing capacity or retain the borrowing capacity, they were using it for the borrowing capacity purpose by the trust structure. Some people were also using it for the tax effectiveness or for safety and security purpose as well, because trust is separate entity than your personal name. So various reasons. Now, if you are an investor, if you want to buy two or three properties, it will not necessarily affect you, because most investors that I know, they buy first 2 or 3 properties and then the personal name, because you can claim negative gearing, etc. You can get a slightly lower interest rate. It's easier, less complicated, less expensive to start with. So most people will start with a personal name, so it will not affect them. But those sophisticated investors, they want to build a property portfolio, 5, 10, 15 properties, that can definitely affect them. Now, if you want to go on that path, and if you think, I want safety, I want security, I don't want to buy under my personal name, I want to increase my borrowing capacity for multiple properties, and I really need a loan under family trust. There are some options in the market right now as well, like for example, you can go to second tier banks. You don't necessarily have to go to the big banks, right? You can find a good mortgage broker who knows which bank will be suitable for you, and that's why I always believe property investment, building a wealth through property is not a one-man show. It's home loan is not simply a matter of what's the interest rate I'm getting. It's more like, this is what I need to achieve. How can I achieve that? That includes a big conversation about the borrowing capacity, loan structure, including interest rate as well. It's not just the interest rate, it's one part of the discussion. So that's why if you need a team, you can reach out to us. We are a mortgage broker as well as buyer's agency firm, and we help everyday Australians make a good decision based on their requirement, and we guide them to build a property portfolio. Thank you so much for watching this video. This is Priyank Patel. See you in the next video.